Hello?
Yes?
Yes. Hi, morning.
Good morning.
Hi. Sorry for the delay. We're trying to set up everything on our side.
Fine. Okay.
Can you hear us fine?
Yes.
Cool. Okay, so I can see your CQG window.
Okay, Kevin's online with us. Kevin's our spreader specialist, and he's
Okay.
going to be going through the spreading product. If you have any questions on charting or straight-out trading, I'll be the product specialist that'll handle any of that, and my name is Jim.
Okay. Hi. I've used this before. I used CQG training about a year and a half ago. I don't know how much difference it is. So again, I think that the point of the company why they asked me to do it was to try to set up a spreader. I'm going to tell you which one it is, and I'm going to be testing it live for the next 2 weeks before we pass on to our traders.
Okay.
So
Wonderful. And again, I'm Kevin. I'm in Chicago. I'm the product specialist that works with our spreader product. I'd be happy to work with you to get you up and running, get you trained, get you familiar with the product.
perfect.
And we can even begin to do that right now. It's always helpful if I get an understanding of what you may be trading, so I can show you that strategy here
Okay.
on the screen.
I'll tell
What exchanges and what? Go ahead.
I mean, the main spreaders I think the main functions we will need, or the main spreaders the guys will need, will be a spread which is $0 versus 10 years, which you're from Chicago. I'm pretty sure all the guys, it's DUTs, which I'm pretty sure you had to explain to some guys there. So a $0 contract outright versus a 10 years. That's the most common spread I think the guys here want to use it. There's always going to be something.
Okay.
Probably long gas oil crack spreading, probably some Euribor against bubbles or boom spreading. But it will basically be those three spreads to start with, I think. But the yields it's the most,
Okay.
the one we want to try the most.
Okay.
And I remember when.
Well, then we can go right into look.
Give me just 1 second. Can you just give me 1 second, please? Hello?
Sure. Yeah.
Hello? Hi, Richard. Bye. Sorry for that. Okay, I'm back. So,
Okay.
first of all,
So in regards
when
to
when I leave this meeting, because I already have my CQG, so I'm using CQG for a long time. I have a charting license, but right now they gave me an access to one that allows to trade. So once I leave this meeting, I'm going to try to set up everything on my license. I remember when I used CQG before for trading, just logging in and making sure all the trading defaults were active was complicated. I don't know if you can go over that process with me so that I don't have any questions when I do it.
certainly
Because I remember it was
in
taking.
regards to the login process.
Regards changing
Go
from
ahead.
if I'm using a charting platform and then I want to enable the trading platform or the trading software, I remember it was taking it was complicated a year and a half ago. I remember that, so I'm not quite sure if that process is simple now.
It's essentially the same process. As long as we have a trading interface open,
Okay.
our ladder can be found here under DOM Trader.
Okay.
The process consists of logging on,
Okay.
typing in the username
Yep.
and the password,
Okay.
enter, and we're logged on. I can see from the trading interface as well that I have no position, or if I'm enabled for a contract, in
Yeah.
this case, under this account, I'm not enabled for tenure, but under this other account, I'm able for 10-year and Eurodollars and USA. So I
Okay.
can see that I have no position and the status of my account.
Okay.
I can also see from the orders and positions window any of my account information, including previous fills for a specified account. As of today, I have no open orders. I have no working orders. So I can see my status as well from the orders and positions window.
Okay.
The log off process is relatively easy as well.
Okay.
The log off button on the left-hand side of the screen, once pressed, then shows that the trading interface is in an offline status.
Okay. So when I log into my platform with my username, it logins automatically the trading platform as well.
No, those are two separate logins. That is sometimes and most often the most difficulty that people have. There's an application logon that you would receive from CQG personnel. That's a logon, username and password for the application.
Okay, fine.
The trade routing application, which we just stepped through, would be provided to you from your clearing firm,
Okay.
consisting of a user ID and a password to enable yourself to live trade or log on to the trading interface.
Okay.
You
So
want a demo account, Sebastio? We could set that up. So if you'd rather not trade in a live account, but a demo, we can set that up.
I think they want me to test live. I think I'm starting live. I'm probably asking for sim limits for 1 or 2 days just to make sure I don't fat finger or lose track of my positions while I'm playing with it. But I think they wanted me to try it live as fast as possible so that we can pass the trades as fast as possible.
Okay. You'll initially be in the demo mode, so you'll need to uncheck that, but Kevin's going to go through that in a minute.
Okay.
Yep. So in regards to the strategies that you're interested in,
Yeah.
I've got a sample Eurodollar 10-year spread.
Okay.
But I'm curious, do you look at that strategy or that spread? Do you look at it price to price, or do you look at it based in net change?
Net change. On a 5-to-2 ratio.
So in this case, I do. Okay. So in terms of a trade ratio, you trade 5 Eurodollars against 2 10-year contracts?
Yeah.
I can build a strategy. It essentially looks like the strategy that we have here, looking at the net change of the DEES 5 Eurodollar contract versus the December 3 10-year futures. Trade ratio is 5-to-2. I look at this strategy based in quarters, but this is all configurable as well.
Okay.
So we can build a strategy as a Q formula, and then it will have an alias, for example, Q4, through our system. And from here, I can go in and to a trading interface and type in Q4, which appears in the center,
Yeah.
and then enter. I can see the legs for that as well. Here's the Eurodollar contract. Here's my 10-year contract. And I'm just looking at this based in net change versus net change.
Okay. So, just 1 second. Good. But is it possible to see the legs? Is it possible to see the legs on their real price and the spreader on net change?
Certainly, since the trading interface has multiple tabs, we can bring in the contracts based in price as well.
Okay. Which Eurodollar contract are you using? Just so me.
I'm looking at DEES 15.
Okay, can you type in the June 17 just for me to make sure, because I have that spread. I just want to make sure that we're seeing roughly the same number as I'm seeing on the other platform. So on the spreader, can you put the June 17?
Certainly.
Thank you. Okay.
So I don't know if you're looking at it just on a one-to-one relationship.
Yeah, no.
This is looking at it just based on a one.
Yeah, so it has to be
One-to-one relationship.
$5 and 2 10 years.
The trade ratio, yeah, is 5-to-2. but the price ratio is 1-to-1?
But that
116.
but that spreader doesn't the level of the spread is not accurate.
Correct. Do you multiply the Eurodollars times 5 and then the 10-year times 2?
Yeah.
So these would be price multipliers?
Yeah. Still not good.
Yeah, we can spend some time going back and forth on how you actually create your strategy. So I'm certain that I'll be able to figure it out. I don't know if it would be most valuable to do the math right at this point, but let's see what we can come up with.
Okay. Because again, when I use, I'm able to create CQG. I use CQG for charting, and the way I get it to on the chart to show me exactly what I'm seeing on the spreader is I use the price to dollar function, and that gives me exactly what the market is trading. Because again, because of the Eurodollars and the Treasuries have different tick sizes, you have to adjust to their tick size. That's to create the charting, not the spreader. But the spreader...
Right. If I had the formula for your chart, I'd probably be able to translate it into a tradable spread strategy.
I can give it to you right now.
So if I do what your multipliers were?
Yeah, I mean, we do price to dollar. So I do the price to dollar of the Eurodollars times 5. Of that contract, so the June 17 times 5 minus the price to dollar of the Treasuries times 2 and then you divide everything by 25. And you divide everything again by 5. That should give you the value of the spread.
Okay. So I'm sure that given a little bit of time, and I don't want to waste your time too much, but I can come up with this number. I'm certain you're actually looking at it in terms of currency value. So you're looking at it EDA M7 times 5, 10-year times 2, taking that, dividing it by 25, taking that result, dividing that by 5.
Yeah, and what that chart shows me, it shows me the absolute value for the spread, which doesn't mean a lot, but then the change on day is exactly what the change on day on the spreader should be.
In terms of its value?
No, in terms of its change on day. The change on day for that spreader, it's exactly what the change on day for the spread is, which is what we trade on the spreader. What that formula basically does is your dollars are moving to a tick is $25, so it's $50 a pop. I'm doing 5 outrights, I multiply by 5. Then it does the same logic for the treasuries, but then because we express the spreader in terms of Eurodollar ticks, it divides by 25, which is the value of the Eurodollar tick, and divides by the number of contracts, and expresses it in Eurodollar terms. That's basically it.
Okay. All right.
Because I know that spread
with that strategy. Yeah.
That spread is showing +5 today, +6 on that change.
+6 on net change.
Yeah, that's what the value of the spread was 5 minutes ago when I joined the meeting. So I'm pretty sure it's around there, and the spread that I see there is showing minus a quarter to minus a half.
Right, but here's the strategy we just came up with, right? It's coming up with a value of 77.01.
True.
So that's not what you're trying to achieve?
Now, if you put the formula I gave you on the chart, if you call a chart for that formula I gave you of the price to dollar, and just look at it on the chart, you'll see that it has the absolute value of the spread, which is that number you showed me, but then it has the change on day, which is plus 6. And that's what that spreader should, that's the number I need on that spreader. That's plus 6. Which is
Oh, so you're trying to come up with this plus 6.
exactly.
Okay.
The net change on day for that specific spread. In terms of euro-dollar ticks, which is how the guys traded.
Okay. So it's going to be based in, and the strategy is based in quarters, 0.25 on the euro dollar.
Exactly. So that's the number we need to get it. And this is always a big problem when we go from any trading platform to any trading platform is if you go from TT to Stellar or Stellar to CQG or whatever, the logic of creating the spreaders and the price ratios is always different. So that's the biggest problem I have. Because everything else is pretty straightforward.
Sure. There's going to be some translation, but if you're using us for charting already, then it makes it a little bit easier because we can just mimic what you're trying to do. Now, some of the difficulty I may have just right now is trying to figure out how to divide this by 25 and then divide that by 5 again.
Okay. Again, we can go over this. I think that if you want to work on this and send me an email when you have the right number, we can set up a call later on for you to explain to me, and we can figure out everything. Instead of being here trying to figure it out, if you can probably explain me how to create a spreader. I can start creating a simple spreader, something that is, I don't know, a euro-dollar contract, which is 1-to-1, same price ticker, same price value, which I'm sure it will be much simpler to create just for me to get how the spreader works. And then once you get that formula,
correct, yeah,
we can go over that thing tomorrow whenever you have time.
Correct. So to build a spread, really what I do is I'll hit new,
okay,
and I'll give it a friendly name. And then what we do is just type in the word spread.
I go to formulas like I
under
do
formula, correct?
Do like I was creating a normal Q formula for charting, right?
Correct.
Okay.
We'll hit new.
Okay.
Then you'll get a box there. Give it a friendly name.
Yeah.
Then you can type in the word spread below and open parentheses.
Okay.
And then once I hit this parentheses, what is going to populate the screen is a few different examples of spread strategies.
Okay.
Above there we'll have the example of the operators that can be included in a spread function below.
Okay.
Really all we need is a linear expression. So in terms of what you're buying and what you're selling, if it's really straightforward, you're looking at TYA versus USA. Buying the 10-year, because TYA is positive in this function, minus USA, so we're selling the bonds.
Okay. So
in terms of the way that we come up with the spread, go ahead.
You're buying, so that spread you're creating is basically buying one 10 years, selling one 30 years.
Exactly.
Okay.
It reaches out, it grabs where the snapshot of the current market is,
okay,
and also gives you the native tick increment for the spread strategy in this window.
Okay. So it says it moves in half a tick.
So that's just...
So what that's showing, it says it moves in half a tick of 132 ticks, and the value of the spread right now is showing minus 6,135.
Correct. It's 6 points, 13 and a half, 30 seconds.
Okay.
Since this natively is priced in 30 seconds. 6 points, 13 and a half, 30 seconds week.
Okay. That's not in net.
From there,
that's in absolute value, right?
This is an absolute value price to price.
Okay.
We can configure the spread to be in net change. I need the setup button below here. I click on the word spread. I can go into the setup button, and from here I can choose from some of the configurations to calculate the spread.
Okay.
If I'm a yield trader, I would turn on yield, yes, yes.
Yeah.
But we're looking for net change, so I can click net change for both legs.
Okay.
If I wanted to adjust the tick size of the strategy, say I wanted to look at this in quarters, I can type in 0.25 in hard code, a tick increment for the strategy.
Yeah.
Before it was a quarter of a 30-second. I can type in 0.25. Okay. And then it plugs in everything I need for that strategy and where it needs to go.
Oh, that's pretty handy.
These examples, I don't even need these examples in here, really.
Fine. So I actually don't
So
need to
here's
I just go to setup and change everything.
Correct.
That's pretty good. Okay.
Now, from this point, if I wanted to put price multipliers,
Yeah.
I could do times 5, for example. I can go on to the USA and do times 2.
That's not,
These multipliers are price coefficients which affect the price that we have in the strategy.
okay. That's
Moving
not-
forward
that's
from
changing
there,
that's not changing the ratio that I still do. I'm still doing 1-to-1. I'm just multiplying the price of 1 by 5. Or I'm doing,
exactly.
okay.
The next step is the trading execution patterns, which can be opened from the trading execution patterns button, bottom right-hand side.
Where you got it? Sorry.
From here, I can trading execution patterns.
Okay.
We'll open up the setup trading parameters window.
Okay. Fine.
And from here, I can configure this strategy based on the 10-year leg and the USA leg.
Yeah.
Spread properties. The color is just an arbitrary color that's assigned to the background of the trading interface. We can
Okay.
choose a new color from here if we wanted to. Since we are server-side, co-located, the possibility of being overfilled or double-filled exists. We've built in some overfill management if you choose to use it by ticking the box here. There are 2 algorithms to choose from for overfill management. Auto hedge overfills will change the size of the leaning leg order to match the overfilled quantity on your primary leg. You're doing a 2x2 spread and you get a filled on a 3 lot on the primary leg, it will adjust the second leg to be 3 as well.
Okay.
Avoid overfills is a slower algorithm. It waits for a confirmation to come back from the exchange before entering or modifying a working leg order. This is a slower process. Most folks want to auto hedge overfills, or they want to leave that unchecked because they'll manage any overfills themselves.
Okay.
Ignore partial fills and price discovery affects how the spreader actually does the math of your open position in a partial fill situation. CQG will use in a partial fill situation your average price that you're filled at to then set the balancing leg order price.
Okay.
I've discovered working with some of our larger traders and hedge funds that occasionally this can result in either positive slippage or negative slippage because of the rounding involved with an average fill price. Ignore partial fills and price discovery says ignore any partial fills that I've received in terms of the price and use the current market price to set the balancing leg order.
Okay.
How to work the order. Here it's the size ratio. If this was traded 5 contracts versus 2 contracts, we can configure the trade size here separately of any price multipliers that we have in the formula itself.
Fine.
Again, more for our hedge funds, but occasionally a broker or a fund will need to keep in a ratio that may not be full numbers. So we could do, for example, 1,750 contracts against 2,670 contracts. Since it's not a one-to-one relationship, there would be some tails that would need to be managed there.
Yeah.
We can actually put on our ratio and have the CQG system manage that and choose, based on these 3 choices below, how we would float that order to the public book. Rounding up would round up this number to 2 and round up this number to 3, so I'd show a 2 lot and a 3 lot to the public book. Round down would show a 1 lot and a 2 lot to the public book.
Okay.
Round mathematically would show a 2 lot and a 3 lot to the public book.
Okay.
Choosing below which legs we want to work. In our system, we have the ability to work both legs. We can show one leg to the public book and then hedge the other leg.
Yeah.
We also have the ability to show no legs to the public book, in which that strategy sits like an electronic eye waiting for the market to come to it, and then we'll inject orders based on that spread strategy level.
Okay.
You're not taking any legging risk, so you're waiting for the market to come to you.
Okay.
So if I'm working one leg to get the edge on the primary leg and then hedge into the second market, I have choices to complete the strategy, either with a limit order to attempt to achieve my spread level in the strategy. I can take that second leg to the market.
Yeah.
I may not achieve that strategy price, but I will not be hung. Or we have the ability to work the edge on that second leg by doing a limit with an offset.
Which is a pay.
I'm going to move the price of that balance. I'm going to try to get edge on the second leg, essentially, yes. Instead of lifting the offer or hitting a bid to complete the strategy, I would join the offer or join the bid, and I can tie in some logic to complete the spread, even if the bid or offer changes at that point.
Okay, so one question about that. So if that number is negative, imagine I get filled on an offer and I need to hit the next offer. If I put that number negative, we're basically working the bid to try to get a better price, right?
Correct. It's price improvement on that next leg. You would be working the bid to try to complete the strategy. You'd essentially be hanging yourself.
Yes. And when
hanging yourself for one price.
And when is it possible to have it automatically hitting the offer if the volume goes below X?
Yes. If incomplete, replace the order, watch the DOM volume on the other side. If it drops below 500, then attempt to pay up one price.
Okay. And if I put that number positive, the first one?
You'll pay up into the market.
Automatically?
Correct.
The same as having market.
That's why -1 is the only thing that seems to make sense, unless you want to try to get multiple prices of improvement.
I'm just thinking, for example, payroll numbers coming out, and this is a question I know my guys will ask me. Payroll numbers coming out, they put an order 2 seconds after the payroll numbers comes out. The market's pretty volatile. So I need to make sure that no matter how many pay-up ticks they do, they get the spreader right. So for example, if I put there +5, it means it's going to try to get the best price at market, but it will hit it to 5 price levels above what it should, right?
Correct. Yeah, you're going to put an offset, so you're going to pay 5 prices worse than you're attempting to do.
I always get.
But most folks would configure.
Yeah, sorry. Yeah.
Most folks would attempt to utilize the pay-up functionality.
Okay.
And enter that number of +5 here, because this is affecting how you're going to offset that primary leg order. So if you do it as a limit order, you're going to try to get your price in that strategy.
Yeah.
If you're not able to get that price in that strategy and the order's in a hung state, it will modify that order 5 prices based on the if incomplete functionality below here.
Yeah. So your advice is if I'm expecting a big move on the outright and I'm working a spreader, I should use the pay-up logic and put how many pay-up sets I need to get, right?
Yeah, I don't make a lot of suggestions in terms of how to trade because of the different market conditions that might be involved. But
yeah.
In terms of the functionality, setting a order to be modified based on 5 price increments and pay-ups would move that order from 1 price, 5 increments from where it was trying to be completed to a new price. It's a modification of that order. If there's an offer there and you're a buyer, then you'll be filled at that level, right?
Yeah.
If the offers have moved away, then you'll have a limit order sitting 5 prices away from where you attempted to complete that strategy.
True.
So if you wanted to take an order to, go ahead.
No, please continue.
So if you wanted to hypothetically take an order to the market, you could configure a large number of price increments that you're willing to modify that order with hopes that there would be somebody on the opposite side of the market to complete that within that price range.
Yeah. Fine. Yep.
So moving down the line here in terms of configurable fields, we have the ability to do the offset. We spoke about a market order. We also have the ability to configure the liquidity controls, such as volume multiplier, which is going to determine the working order quantity based on the quantity that's available in the monitored market. So if I'm working at, say, a 2-lot and a 5-lot, or a 5-lot and a 2-lot, and I'm working the 2-lot, I can tell the system that I need X times my order size in the secondary market to lean against. In this case, I need 25 to lean against. It's 5 times my order size.
Okay.
To help prevent being hung. If that order, if that quantity is not available, we can also tell the system to then move that order X price increments away.
Fine.
Now currently, the way the system is designed, we only look at the top of a book. So we only look at best bid and best ask.
Okay.
We don't actually calculate through the book to come up with the quantity that's available at the next level and start doing that math. So we just offer the availability to move the order X price increments away with the assumption that there should be enough quantity at that next level.
Yeah. Okay.
We also have the ability to set a working threshold. In this case, a working threshold is an on-off switch. You can tell the system, I do not want to work my strategy unless there's X available in the public book.
Yeah.
These are additive in nature, so I would need 50. I would also need 5 times my order size. I would need 75 total to lean against in this scenario. Moving down the line, the messaging section, including the minimum size increment here, is going to look at the increment in the public book that would have to occur before you modify your order. So if you've ever seen a flashing 1-lot come into the marketplace and then see the spreaders react to that,
Yeah.
you can avoid that scenario by saying a minimum size increment of 2, I will not react to any 1-lot that's flashing in the market to then reprice my strategy.
Yeah.
So this is the minimum increment that's necessary in the public book before you go ahead and reprice.
That's helpful.
In order to control messaging, we've added some stuff recently. The active price range defines from the best bidder offer, or you can choose best bidder offer only, that you're willing to work your order or show your order to the public book. So if your leg, or if that working leg order is 5 prices away from the best bidder offer, in this scenario, you can tell the system what you want to do with that. By default, it will continue to work that order. You can choose to cancel that order. You can choose to work that order, but only update it periodically based on the price change, or time change listed here. So every 30 seconds, go ahead and update that order. Or we can say, go ahead and work the order, but actively move it away from the market if that's what's necessary.
Fine.
So this helps to reduce messaging by defining how close to the best bidder offer you're willing to show the public book in order. And then if that order falls off of, say, best bidder offer, or 1 price increment from best bidder offer, then go ahead and do what is defined below.
Fine.
Proportional execution was built for folks who are trading basic. So if you're trading 1 million cash versus 10 futures, quite often these guys would want to say after 8 or 9 of the futures, go ahead and send in that 1 million cash order.
Okay.
So if you're trading a ratioed spread 5-2, after you get the 4-lot completed, you go ahead and send in the total of the 2. Otherwise, it will try to keep you in a ratio of 5-2.
Okay.
Moving down below, we have queue holders as well. Queue holders allows you to stack the book subsequent of your primary order. You probably used queue holders or are familiar with those from previous experiences. Okay. And then the if incomplete section, incomplete being our word for hung.
Okay.
We could tell the system that we need to replace the hung order, checking this box, and then follow the methodology below. We've talked about just pure pay-ups, pay-ups being a modification of the order from one price to a new price.
Yeah.
We can also leave the order in the public book for up to 30 seconds at its original price that it was hung at, and then after that timer is exhausted, we can then employ the pay-up functionality. We can choose to do trailing orders, for example, and move it X increments. Trailing limit is going to move the order on the same side of the market as the market moves with you.
Okay.
So if you're a seller and you needed to sell 16s to complete your spread and the market goes 15 offer, you'd join the 15 offer. If the market went 14 offer, you'd join the 14 offer. You'd move 3 price increments with the market following the same side, the behavior same side. There's another choice, trailing limit opposite side. This will modify the order based on the other side of the market and what's happening there. So again, if you needed to sell 16s and the best bid was at 14 and somebody pulled the 14 bid, we would move your order down to 15 regardless of whether the rest of the market went offered with you.
Okay.
If the 13 bid got pulled, we would move your order based on, again, the opposite side of the market.
Okay.
And then the last choice is really for folks who are trading short-term interest rates. We talked about a scenario where we look at DOM volume. It's just a pure quantity that would need to be breached. So once that quantity is breached, then the system would attempt to modify that order based on the pay-up behavior you've set up above.
Okay.
The second choice is the DOM volume relative to your order size. If you need to do €1,000 and there's 5,000 on the bid, there's a relationship, right? So you can put in a relationship anywhere from 0.1 to 99.99, but let's say 0.5, let's say call it 50-50 relationship. So if you need to do €1,000 and there's 2,000 left on the bid, you're within that ratio,
Okay.
right? If that bid drops below there and breaks your ratio, then it would attempt to pay up based on the pay up strategy above.
Okay. And so I can
The third
use
and final choice is the DOM.
Can I just ask you something?
Go ahead.
I can use that logic either for my pay-up logic when I'm hung, or either for my, let's call it, when I'm trying to improve my price. So I got fill on the offer, I'm working a bit to try to get the best price, but I'm hitting that offer if it goes below X value or X relationship to what I need, right?
Correct. So you're talking about using it with limit with offset
Exactly.
and trying to get price improvement on the second leg or get edge across the spread.
Yeah.
Yes, you're hanging yourself. So if incomplete functionality will work with that.
Okay.
So we can say to the system, I know I'm trying to get one price of improvement. I'm going to modify or pay up that order if the volume on the next level goes below 250.
Okay. Perfect.
Now, the only caveat, and I give this caveat to everyone, is that in some circumstances, certain exchanges can send quantity updates, and in other circumstances, they have the right not to send a quantity update, and they'll send a new price update instead. This is most frequently in a fast market situation where there might be a lot of quantity come through at a price. The exchange has the ability to not disseminate that to the public. Instead, they disseminate the next price, which is usually a price change. I've seen instances where folks will have a threshold set. The exchange will not publish the quantity update. CQG does not get the quantity update. Therefore, the hang logic does not trigger.
Okay.
And instead, the exchange sends out a new price. That's a scenario that's possible. It's not very frequent, but you need to know that that is possible and it could happen. I explain this to everybody so they have an understanding of the limitations of this functionality.
Okay. Do you know which exchanges that happen more often?
I've had the experience with CME Group.
Okay.
I don't know about the other major exchanges.
Okay. Okay.
Okay? So that would configure that strategy essentially the way we discussed, hitting OK and then apply would then apply those configurations to the spread. Those configurations now go out to both exchanges if it was in two exchanges. For example, if it was Eurex and Life or Eurex and CME, those instructions would then go published both server-side at both exchanges.
Okay.
So it has the instruction of what to do with the strategy. at that point.
Okay. So right now I just need to call, so that spreader is set up with all its paying logics, everything. So now I just need to open a window with that spreader, right? Right.
Correct. Noting that Q8, so we can open a window, for example, and bring into there Q8, and then enter, and then we'll see the friendly name on the tab at the top. And then the legs button below, there's a little arrow here to open this menu. The legs button will populate the two legs.
Okay.
If it's a net change strategy, it's going to populate those two legs based in net change.
Okay.
But since we have multiple tabs, we can look at price as well.
Fine.
And price here. I can quickly use the drop-down to change whether I want to show both legs, for example. I have the ability to configure also different order types. Just a regular day order would show my total quantity.
Yeah.
We also have Iceberg functionality. Iceberg functionality is server side.
Okay.
So I can do, even though there's a 5x2, I can do a total of 10 of these and only show the market one at a time, one clip. So a 5x2, and I show that's the public book. And then it will reload essentially until I do a total of 50x20, showing it one at a time. I can do the confirmation here and show how many clips of 5x2 I want to show at one time.
Fine.
So Iceberg functionality is server-side, and we have that available. Just looking at the orders and positions book,
How do I open
something
that?
that is always handy to talk about.
How do I open the orders and positions window?
The orders and positions window is located under More,
Okay.
Orders and Positions.
Okay.
It also has the ability to be configured under Setup and Orders and Positions Preferences.
Okay.
From there, under the Display tab, you have the ability to go through and change all of these different display views for the orders and positions.
Okay.
The list of columns that are available are all listed here.
Okay.
Orders working, orders filled. The Summary tab will provide you a summary of everything you've done, as we see here. And I've removed a lot of those columns.
Okay.
So open position, quantity of buys, quantity of sells, my open trade equity, volume ratio, and messaging, which is an estimate for that current open position.
Okay. You just put a position right now, right?
Correct.
Okay.
In the strategy manager, I can also see any working strategies. I can see that strategy based on my strategy price.
Okay. But you just for me to understand. So you put a position just on one outright, right? You just long 30 years.
Yep.
Okay. You didn't,
I'm long 130 year. That's it.
okay. You didn't put the spreader. You just got the first waiting and still waiting for the other one, right?
Correct.
Okay.
Functionality within the DOM itself, the ability to cancel all, cancel global. So cancel all will cancel all working orders in this view.
Yeah.
Cancel global would cancel everything for your account.
Okay.
Cancel buys and cancel sells button is configured there separately as well.
Okay.
You can modify orders as well from the public or from the orders and positions book under orders working. You can change the quantity.
Okay.
We could change price if we wanted to.
Okay.
I can also cancel these orders from the book here.
Okay. So I can change the price on an outright leg of a spreader?
No, not on the strategy, because that's going to be tied to the strategy.
Exactly.
So although I have a working order price here, I believe if I try to change this, It's not allowing that because it's part of a strategy that ties into the strategy price.
Okay, fine. My positions, where are they? Summary, right? Okay.
Positions is going to be under summary. Currently, I'm flat.
Okay.
I have no open position. If I had an open position in a outright, I would see both my position at the top, the average fill price of that position.
Yeah.
I can see that in the trading interface background as it's red here.
Okay.
I can also see that I'm short 2 from the position column in the orders and positions book.
Okay.
You want to show them right-click cancel on individual order too?
It's a left click to place an order.
Yeah.
It's a right click to cancel an order.
Okay.
Also, if I have layered orders, I can double left click that total quantity, and I can see the layered orders in this shadow box.
Okay. Can I drag orders?
You can drag orders to a new price and release, yes.
Perfect.
You can drag it through the bid to
And
get short, but I have a confirm here, which tells me I'm going to get filled right away.
okay.
I've set that warning sign up under Setup and Trading Preferences. There's a few different columns here that you should be familiar with, including notifications, fill sounds, pop-ups, fat finger risk limits, which are your own risk limits,
Yeah.
including the quantity buttons that are available in the trading interface.
So where do you got the trading preferences tab? Where do you got it from? More as well?
Setup
Okay.
and Trading Preferences.
Okay. So before I start trading anything, I need to set up that, right?
This is your first stop, yeah. Setup and then Trading Preferences would be your first stop. And then from there, just going through the display and setting up things, you can move columns around.
Okay. One thing
You can
about
change colors. You can change the look.
one thing about that trading
Go ahead.
platform, the trading preferences, you were saying about the volumes to not fat finger or have over-clipping or whatever. Some guys have, imagine, 100 clip in Eurodollars, but only 10 clip on Euribors. That trading preferences is for the entire account, or it can be set up by product?
Both.
Both?
We have by default for all products, correct, both.
Okay.
We have by default for all products a maximum order size of 25, a maximum position size of 26. If I wanted to add a specific symbol, in their system, they'll be able to type in EDA.
Okay.
But since I'm connecting to a different server, I don't have the list of symbols here today. But EDA would be in the list. I would hit OK. EDA would then populate under this tradable symbols, and then I can set maximum order size for EDA. That would only be for EDA. This default quantity would affect everything other than EDA. So I can drill down and go by specific symbol. Here's my symbols now.
Okay.
So here's EDA, and now I can say my largest order is going to be 100, and my maximum position for EDA will be 250. My buttons I can change, 10, 20, 30, 40, and so on.
Okay.
And if I apply, you can see nothing has happened to any of these trading interfaces. But if I go to EDA, you can see that I now have those limits, and the order buttons appear as I've configured them, different than the rest.
Perfect. One other thing about that, if I put a EDA, would it be applied for outright and spread, or just outright? Do I have to create different things for...
I have the...
So if a guy has 100 in
So
spread, but only 10 in outright, do I need to set up one for ADA outright and then one ADA S1 or ADA S for calendars?
The calendar spreads are all listed here as well. So you can set it up for each one.
Okay. And one can, the outright would never cancel the spread if I do it like that, right?
Ask that question again. I'm sorry.
So the outright limits would never cancel the spread limits, right? Because, I mean, spreads are still a combination of outrights. So if a guy has 10 on the outrights on Eurodollars, but he's trading 100 clips on spreads, he can still do 100, although his limit on outright is 10, right? If we set it up.
Let me be absolutely clear. Let me be just very, very clear. This is only fat finger limit for the front end. This is not the limits that your FCM would set for you. This is just a convenience to have the ability to set your own limits based on products. So for the spread, if you want to do 500 and 1,000, you're not going to be, it's not going to affect EDA.
Okay, fine, that's it.
And your user would be able to trade no matter what. This is only a pop-up that you would be able to move forward from, but you'd be breaking your own limits. So if I go into EDA and I try to do 200, I get a pop-up that says I'm exceeding my size limits.
Yeah.
I can still move forward and place the order. It's very different, though, than what your FCM would set. And the FCM can set separate risk limits for outrights and calendar spreads.
Yeah. No, I know that.
When spreading synthetically, one of the concerns always is to make sure that there are enough in terms of limit to be able to spread the outright contracts in terms of the risk.
Exactly. That was my point, because they might be spreading outrights against outrights, but they may also be spreading calendars against calendars. And if the outright limit wouldn't allow them so they get one leg on the calendar, then when it's going to do the other leg on the other calendar, imagine they're doing Euribor calendars versus Eurodollar calendars. And they do the 50 Euribor calendars. When they go to do the 50 Eurodollar calendars, the limit we set up there to fat finger on Eurodollar outrights was 10, and it wouldn't allow them to do the 50 Eurodollar calendars, and now they're hung. I was just trying not to prevent that.
It would still allow them, though. You'd have to click through the warning box. But as well, I believe in the CAST system or the risk system that you can define limits separately for the outrights as well as the calendar spreads. So you should be able to configure it just the way you need to do business.
Okay, on that trading preferences.
No, you'd have to go into your FCM would have to manage that.
No, I know. I mean, my risk will put the right limits. I'm just asking if I put 10 on the EDA, it's just for the outright. It's not for the spreads, right?
That's correct.
Okay.
Because in the EDA S3, and I'll do this as an example. So if we go to EDA S3, and I want to do more than 10, I'm able to put that in straight away.
Fine.
If I go into the EDA contract and try to do more than 10, it says I'm exceeding my size limits.
Okay, that was.
From there, I can still place the order.
Yeah. But I think isn't his question, let's say he's doing this knob spread that you currently have set up, right? Let's say his risk is 10 years and 10 30 years. But then when he does the spread, he wants to do 50 spreads. Isn't he going to get it rejected because based on his limits?
Correct, because the way that the spreader will see things is a worst case scenario or a potential position. So if you're doing queue holder orders, for example, or if you're doing iceberg orders and your limit is only 50, if you try to do 100, although you're only showing the public book 5 at a time, your risk limits in terms of a potential position would be breached.
Yeah.
So that's one of the functions of that risk system.
Okay, fine.
But I think we've covered your question, right?
Yeah, it's covered. Yeah.
Okay. Do you guys have any other questions
I think
from what we've seen so far?
I think I'm going to try to create some very simple spreads, just things that are same take value, very simple. I would need, for me to start testing properly, the function to create Eurodollar versus 10 years, which then if you get that one, it's very easy to get Euribor versus the bubble, the sterling versus the gilt, all those spreads. So I'm going to start playing with I'm going to create a Eurodollar calendar or a fight, which is very simple. But if you can come back to me as soon as you can on that Euro 10, and if you can get the number I showed you on the chart, that 7.25 that you're seeing there, right?
Yeah, so it's basically the net change of the currency values. I'll have to pick it apart and look at it, and I will spend some time this morning if you'd like and take a look and try to crack this one for you.
If you need
The other one that you mentioned is the.
Yeah.
Go ahead.
The fight is very simple. It's a three times the 5 year minus 2 times the 10 year on net change. So it should give you the normal.
Yeah, here's my fight formula, and here's what I come up with. Q2. So here's my current fight market, and I'm looking at it in 12th of the 32nd.
Which window do you have it? Sorry, can you?
The biggest one on the screen at this moment.
But that's not in net change, is it?
This is a net change, correct?
Oh, because if you open the fight, okay. That's a weird window because if you open the fight, the fight exchange traded window on CME, I don't think it shows that value, does it?
I might have different months. I have to check here. Right, I'm looking at September. So let me bring in the D's. You're looking at D's. So let's look at D's. I mean, this is if you get 5 guys who trade the fight, everybody looks at it a different way.
Yeah.
Yeah. So here, one.
Yeah.
Right.
Can you show me the formula again, just for me to understand what it is, please?
I can't. No, I'm sorry. I'm kidding. Here's the fight formula. I can send it to you. Why don't I do that? Because this way you'll have my email, and I'll be able to send you the cheat sheet where we discuss the trading execution patterns. There's a 2-page PDF I can send you. Okay. And then I can also send you the spreader user guide. So how about that?
Yeah, that would be perfect. I mean, I'm going to start playing with it today. And then the only thing really missing is how to create that 0.10, the Utes, or everything on the spreader to get that number.
Okay, so you're looking for a Ute also? Ute, EUT?
Yeah. So
you trade the UF, the EUF?
Yes, I trade the UF, and then the similar spreads on European markets will be the Euribor versus the Bobble, the Euribor versus the Bunds, so the Utes and UFs in Europe, and then the Utes also in UK, which will be the Sterling versus the Gilt.
Okay.
I can give you the ratios for that one if you want, but if you can...
I think I have the Ute. I think I've already figured out the Ute and the UF. In fact, I just worked with somebody, and he was looking for a formula for the Ute, and he said that what I had was correct. So let's work with that. The easier, the better for me. And then I can send you the fight, the Ute. I think I have the UF.
Okay.
And then I'll look at this 10-year euro-dollar strategy that you're looking at and see what I can make out of it. As long as I have the number, then usually I can deconstruct it and try to mimic what you're looking for.
I mean, that spread I show you is the Ute.
Oh, okay. I have it on another system. I'm pretty certain. So we'll send that off.
It will just make a difference which euro-dollar contract you choose, but that chart is the Ute.
Okay, fair enough.
Okay. Some guys in Chicago might do a 5-to-3 ratio or 4-to-2 ratio. Sometimes the ratios change slightly, or 6-to-3 instead of 5-to-2, but the logic is that. Right. So that spread that
okay, so we can
have is Ute.
Okay, we can extrapolate from what I have then.
Okay, fine. Okay, so again, you have my email.
What's an email that I can?
It's SE.
Let me take your email down now.
Yeah.
Go ahead.
SEBASTIAO dot LAGARTO at OSTC.com.
Okay, wonderful. I'll send you an email. I'll include a couple of formulas to get you started.
Perfect.
I'll include the documentation that will be very handy in the beginning. And if you have any questions, feel free to email me. It's going to be the best way to find me. And I can even drill down on more specific questions the next time around.
I'm going to start using it. So I think I will be playing with it today and tomorrow. And then probably by the end of tomorrow, I'll have some questions, and I'll send you an email. If you don't hear from me, it's because everything
sounds wonderful.
If you don't hear from me, it's because everything's working fine.
Wonderful. Okay. Great.
Thank you so much. Thank you so much for your time.
Okay.
Okay. Thank you. Bye.
Thank you very much for your time as well. Okay.
Thanks, Kevin.
Bye-bye.
Bye.